So I would like to thank the organizers for inviting me to this conference. And I should, as the other central bankers have done, read the disclaimer. The views expressed in this presentation are those of the presenter and do not necessarily reflect those of Danmarks Nationalbank. The title of this presentation is also the title of a report that we published in 2017, Central Bank Digital Currency in Denmark, ? And where we've looked into the pros and cons from a Danish perspective of whether we think that in a Danish context, the central bank digital currency would be a good idea to issue. Just to clarify, I should probably say that when I talk about central bank or CBDC, I should probably say to make it easier for myself, when I talk about CBDC, I'm talking about something which is very similar to what Carl Andreas, you talked about the E-krona project, and Michael Kumhoff talked about CBDC as well. So I'll be talking about something which is issued by the central bank alongside cash and also with the coexistence of private deposit-taking banks. So central bank digital currency means that you can have, for example, you can open an account with the central bank, or the central bank can hand out some kind of wallet, electronic wallet, which you can then use to make payments. And of course, it's a retail CBDC, so the idea is that it would be available to the general public, whereas of course now the banks can hold electronic claims on the central bank. So just to give you the main conclusion, we, after looking into this, concluded that at least from a Danish perspective, we didn't see large benefits of having a central bank digital currency. On the other hand, we saw some potentially substantial disadvantages that I'll get back to. And of course, this should be seen from our perspective. We have a very well-developed financial sector. We have very efficient payment systems, and more or less everybody has a bank account. Of course, this idea that you should look at it from the perspective of each individual country, this is also something that has been emphasized, for example, by the IMF, the International Monetary Fund, saying that from a central bank perspective, the case for CBDC is likely to differ from country to country. And also, as Dirk kind of suggested, central bankers are quite cautious about this in general, and we are not alone here. So the BIS, the Bank for International Settlements, published a survey in January where they actually found that 85% of central banks see themselves as being either unlikely or very unlikely to issue a CBDC in the short run. And also in the longer run, more than half of the central banks see this as somewhat unlikely or very unlikely. So just to say that this is not an extreme view that we've taken here. So I'll give you a little bit of background on the Danish financial or the Danish payment system. So like Norway, like Sweden, we're a very digitalized economy, and this is also reflected in the fact that a vast majority of payments are done electronically. So now cash payments take only around 20% of retail payments, whereas the remaining 80% is done using cards, so using bank money or commercial bank digital currency, we could call it. And this shift has been fairly rapid, as you can also see here. And it's been voluntary. I mean, it's been a development not driven by the central bank, but driven by people's wishes to use electronic means of payments, because it's safe, because it's convenient, it's easy. Cash is not very convenient. I have my wallet here. I just want to show if I have other stuff in the pocket. But I mean, this is the typical Danish wallet. You can see there's no cash in it. There's just a bunch of cards, and that's of course the same here in Sweden. This also is also reflected in a very relatively low circulation of notes and coin in the economy. Though you can see that here the development is not nearly as dramatic as in the use of notes and coins for making payments. So you can see that even 100 years ago, most money was, as you say, created by the banking sector together with the firms and households. So this, of course, this development in the use of cash, of course, indicates that in Denmark we have a very efficient payment system. And actually we have this so-called straks clearing, the instant clearing system, which is illustrated out here. And this is used, for example, to make payments person to person using the mobile phone. So we have in Denmark this so-called mobile pay application. I think here in Sweden you have the Swish, which means that I can, by using my mobile phone, I can transfer money from my account to my friend's account within a second. So he sees on the mobile phone immediately, now he has received the money. I mean, it's very difficult to imagine that a central bank digital currency could do something better in that respect. And I mean, this is something which has been driven by the private sector. These infrastructures are owned by the bankers' organization, and the central bank has not been the driving force here. So this is kind of a private initiative which has brought us here. So for payment purposes, it's very hard to argue that a central bank digital currency would add value in addition to what we have already. Then it could be argued that central bank digital currency should be introduced in order to allow people to have a risk-free financial asset. So today cash is risk-free and is issued by the central bank. Also in Denmark, cash is still widely accepted in the shops. And we have a rule, the cash rule, saying that if you have a shop, you're obliged to accept cash except late in the evening. There's some exception, late in the evening if there's only one person working in the shop for security reasons. So we don't really have this issue that cash can no longer be used for making payments. Then we have, of course, the deposit guarantee scheme, which means that deposits in private banks up to 100,000 euros are guaranteed. And even deposits over and above 100,000 euros have a preferential treatment in the so-called bail-in hierarchy. So you have a fair chance of getting at least a good deal of your more than 100,000 euro out, also if the bank fails. And of course, if you have a lot of money, if you have more than 100,000 euros, you're also free to divide up your cash between different banks in order to ensure that you don't exceed the limit of the deposit guarantee scheme. If we were to introduce central bank digital currency, we might attract some large deposit. We would become a competitor to the banking sector, which is not really what we're supposed to do. And also, in the current low interest rate environment, well, providing unlimited risk-free assets would in some sense be a subsidy to the wealthy people. Because if you look at it, if you have a lot of money, more than 100,000 euros, you want to store it safely, well, you could buy a sovereign bond. You can buy a AAA-rated Danish sovereign bond. That would come at the cost of paying you a negative interest rate, because it just happens that risk-free interest rates are currently negative. So if we then as a central bank suddenly started supplying central bank digital currency at a zero rate in unlimited amounts, well, then would in some sense subsidize these people that should have otherwise bought a sovereign bond with a negative interest rate. Then it could be argued perhaps that CBDC would be a backup in case of a breakdown in the current payment systems. Well, I mean, if the electricity fails, then this thing would not work either. And also, I think it was mentioned earlier by the Swedish Riksbank that there is some kind of backup or offline facility in the Dan card. We have this nationwide payments card, which means that you can actually make payments for a while, even if the system were to break down. It's also not a new phenomenon. I mean, cash has not played a major role for several years. So why suddenly do something else now? Then also, you could argue, if you are worried about the stability of the infrastructure, should the central bank then provide a completely separate system, or should you incentivize the private sector to make the current infrastructure more safe? I mean, we've clearly chosen the second option. And also, if you were to, suppose you should be able to transfer money from CBDC to other banks. Well, but then there is some kind of connection between the CBDC infrastructure and the other infrastructure. So would you then operate one without the other if one of them breaks down? I mean, that's that's a bit unclear here. So we wouldn't really see this as a useful backup. We would rather try and strengthen the existing infrastructures. So those are some of the potential benefits that we haven't really put a lot of weight on in a Danish context. Let's look at the risks. And as has already been mentioned and has been discussed quite widely in central banking circles, well, CBDC would be the ideal tool if you wanted to do a systemic run on the banking sector. So currently, you can do a run on one bank, you can transfer your money from one bank to another. But you can't do a run on the banking sector as a whole because you wouldn't be able to, or the banking sector wouldn't be able to provide sufficient cash so you could simply withdraw everything. Well, with a CBDC, you could within seconds transfer all bank deposits into the central bank. And that would be really dangerous. How would the banks then fund themselves? They would need to get some other source of funding, which would probably mean that they have to borrow at a very short notice at the central bank. That could be problematic. In particular, they would have to provide some kind of collateral in order to borrow at the central bank, and we would need to ensure that this collateral was of a sufficiently high quality, because otherwise, if they borrow against poor collateral, you would actually transfer a lot of risk, put a lot of risk onto the central bank, which essentially means you would put the risk onto the taxpayers when they suddenly had to borrow to lend to the commercial banks. So this is a risk which has also been emphasized by the IMF, the International Monetary Fund, and other institutions looking into this. And it's also mentioned in the Riksbank report. I mean, I would recommend you to read the Riksbank reports because they have a lot of useful considerations about these things. Then you could, of course, argue, well, you could put a cap on this thing. You could cap it, so you could say that up to a certain limit, no more. But that would also not be without problems. I mean, if you restrict the supply of one type of money, you can no longer have this par. You can no longer exchange one money one-to-one with the other money. So if there's suddenly restriction on the supply of CBDC, the price of 1 krona of CBDC would suddenly exceed the price of 1 krona of bank deposits. That would make matters rather complicated. You could, of course, also make individual caps on each person's CBDC account, but then what happens if someone wants to transfer money to me and I exceed my cap? It's also not easy. And I could easily imagine that if this pressure was to emerge, and if we saw this in a virtual sense, then there would be a huge pressure on the politicians to increase the caps on CBDC, and then you would have the bank run after all. So I think this is something which should be looked into very, very carefully by those institutions that want to pursue these things. So fundamentally, well, we think this is a rather fundamental change that should be approached with a lot of caution. Raises questions about the split of tasks between the central bank and the commercial banks. I think it's also important to point out that it's not really a matter of technology. I mean, we could offer CBDC, we could have done it a long time ago. Actually, I used to hold CBDC because when I joined Danmarks Nationalbank, I had an account with the central bank. So my money was paid into a Danmarks Nationalbank account. That was clearly digital money. It was not physical money, it was digital, it was in an account. And it was in an account supplied by the central bank. So all Danish central bank employees used to have central bank digital currency. Just didn't know that's what it was called, but essentially it was. That was closed down because it was not really the task of the central bank to provide the deposit accounts to its employees or to the rest of the population. But if instead of closing that thing down, we could have expanded it to everybody, then we would have had more central bank digital currency. Also, it's been argued that it could encourage competition between banks if there's a public player in the market. Also, I think that's not really how you would normally create competition by making the government enter into the marketplace. You would rather do some kind of regulation regulatory changes in order to encourage more competition. There's also the question of anonymity. I mean, cash is anonymous. We can accept that because the circulation is low, so there's a limit to how much money laundering you can do using cash. If this thing was to become anonymous, it would be a big problem. A lot of things, a lot of illegal activities could be done. Then there's, of course, the question, is it possible to make it anonymous? I'm not a technical expert, so I don't know the answer to that. If it's not anonymous, it will impose a lot of burdens on the central bank, a lot of regulation, know your customer, anti-money laundering activities. Of course, we could do that. It's not because we don't like to work, but it's just not really. It's more the thing. It's more the fact that we can't really see the benefits with such a thing. So I think it's primarily a matter of identity. What is a central bank? We find it hard to see what it would contribute in a Danish context. We think there are some considerable challenges to financial stability. Not least, and we therefore concluded that the best way to serve Danish firms and households would be to not open accounts for everybody, but to continue to be a central bank. So I'll conclude here.